Welcome to the SNN Network Canada virtual event. I'd like to introduce our next presenter, David Hart, President and CEO at Geodrill Limited. David, the floor is yours.
Thank you, Paul. And thank you. Good morning, everybody, and thank you, SNN, for putting on this conference. Geodrill is an exploration drilling services company operating in West and North Africa, predominantly in Ghana, Burkina Faso, Ivory Coast, and Mali, and most recently, Egypt. We've also recently expanded into South America. Our customers are major, intermediate, and junior exploration mining companies. Our model is flexible, which allows us to work for either or both. We drill for gold and base metals and EV metals, all of which are doing very well at the moment. Interestingly, nearly all miners are now citing a need to shore up depleting reserves. Gold reserves are down over 42% from the peak of 2011, and to make new discoveries takes many years. And at the current spot price of $1,780 an ounce, well above the critical support levels for greenfield exploration, particularly given the strong projected free cash flow of the miners. So drilling is a cyclical business. The industry is currently entering the first innings of a new upcycle. And as a result, most drillers are reporting increased utilization and strong financials. And drillers are a great way to invest in mining because we speak for the largest of most exploration budgets. For your information, approximately 50% of exploration dollars goes into drilling. By way of example, Geodrill also recently released its Q3 financial results, and I'm pleased to say at this point in time we're currently on track to deliver our strongest, most profitable year ever. So the industry is definitely coming alive. So this is our standard disclaimer. So background of the company is that I founded this Geodrill 25 years ago with one rig and one contract. We quickly went about establishing ourselves as a formidable drilling outfit. It was a very different market back then. The big corporate drillers were sending their old worn-out rigs to Africa. I looked at this a little differently. I thought to myself, if I was to make this my primary market, then better I send modern, high-performance drills. So since the get-go, our mission statement has really been one of quality and quantity, and also listening and responding to customers' needs. It really was just a simple message, a simple recipe, and it's proven to be a very successful one. So Geodrill has always enjoyed impressive and consistent growth, and we have always invested our profits back into the business. Demand drives utilization, so our growth strategy is simple. Whenever we reach 70% utilization, we add rigs. We recently reached that 70% inflection point again, and so we're currently adding an additional 5 rigs. And when the future enlarged fleet reaches 70% again, we'll add more rigs again, and on it goes. It is noteworthy that all of our growth has been organic. There has been no M&A in the company's 23-year history, and it's always driven by customer demand, which is underpinned by our simple vision, and that vision is to be the preferred drilling partner in Africa. We pride ourselves on providing the full gamut of exploration drilling services using modern, high-performance fleet of drills, and also by providing our customers with solutions such as multi-purpose drills that perform both reverse circulation and core drilling. One rig that drills 2 methods, thus reducing the requirement for drills and less personnel, etc. Basically a better, more efficient way of doing things. And this has proven to be very successful and has resulted in very high rig utilization, even in down cycles. And as our customer needs have grown, we have kept pace with that demand by growing our fleet. The result is that Geodrill now speaks for 30% of the drilling in the 4 key West African markets that it operates in. West Africa is a long way from home, and drill rigs require regular maintenance, that's for sure. To deal with this, Geodrill operates a hub and spoke maintenance workshop mode across all of its operations. The slide that you're looking at is our Ghana operations base. It is a 35-acre facility that we call the hub, and in the hub we have vertically integrated a world-class maintenance workshop and HSE training and drill academy for training our young drilling talent. We have a very Africanized workforce, and we do that through the drilling academy. Inside the facility, we also espouse the inventory of critical spare parts and consumables. And that's how we keep, that's where we warehouse everything to keep the rigs turning and earning. And inside the facility, we also have something which is interesting. It's a CNC engineering plant, which enables us to make our own drill rods and our own drill spares. We can even make our own drill rigs. Now, for the outlier locations, we operate smaller but still quite comprehensive facilities. For example, in Ivory Coast, where we are currently putting the final touches on our 10-acre facility out there. Generally speaking, we've done this and we've prepared this and planned this in a way that no rig should ever be 12 hours away from a support facility of some sort, be it the base or be it the hub or be it one of the spokes. And this is how we keep them turning, and this is how we keep them earning. Now, importantly, because of this commitment, we've not experienced any supply constraints across any of our geographies. Last year, during the height of COVID, when flights, basically air flights had completely shut down in some of the countries that we operated in West Africa, we did not miss out on any production as a result of not being able to restock because of this integration model that we've built. Now, this gives us a distinct competitive advantage over our competitors. We like to call it our mechanical advantage, or as our COO likes to say, just keep them turning, keep them earning. So why West Africa? So the thing I found so attractive way back when I started Geodrill was that this region had missed 50 years of modern exploration. In my time here, I've seen 3 exploration booms come and go, and the results have been quite profound. Junior exploration companies have merged into intermediate miners who have then merged into senior miners. Nowadays in West Africa, the market has grown into a very mature market, and all the big miners are here, such as Barrick, Newmont, Kinross. For your information, Ghana recently became the largest gold producer on the African continent, eclipsing South Africa. And hot on its heels are the other markets that we operate in, Cote d'Ivoire, Mali, Burkina Faso. It's interesting if we look at it on an amalgamated regional basis, and remembering that Africa is 54 countries, if we take the main gold-producing West African countries, then collectively they would account to become 3rd largest producer in the world. Now, my point is that any mining company not in Africa is missing a substantial piece of the pie. And therefore, by extension, any picks and shovel business not here is also missing out on a substantial piece of the pie. Now, with all this exploration mining going on, you can imagine the big drillers are all here too. So we certainly have our share of competition, and that's okay. We like competition, but through it all, we've survived and we've thrived. And in 2019, Geodrill became the largest driller in Africa, and we are actually the 7th largest driller in the world. Now we're busy entering the South American market. Excuse me. So why South America? Well, it's all part of our longer-term strategy to diversify geographically and commodity-wise. So we recently expanded into Peru. We chose Peru because we quite simply, some of our existing West African customers who also have operations in Peru were saying that the service offered by Geodrill in West Africa is superior to that being offered in Peru. So in keeping with our simple business model, keeping the customer satisfied, we said, yep, we're up for that. And so far, the results have been very, very pleasing. Interesting points about Peru is that Peru is the second largest copper producer in the world. We like copper. It is also endowed with many other minerals. Our experience is that Peru has been a very business-friendly jurisdiction for us. Yes, they had recent elections that were contested, but that has since resolved, and the new government does seem to be business-friendly. So confidence is growing, and as a result, we are receiving numerous tenders which are pending. We're encouraged by this, so much so that we recently sent another rig. So things are looking great for us in South America. So I'm going to change gears here and talk about financials. I mentioned before that demand drives utilization. The other half of that equation is that utilization drives revenues. This is a snapshot of our trailing 5 quarters. I did mention that we had record year-to-date results. This is our Q3 that I'm looking at on the right-hand side there, which is our seasonally weak quarter. But if we compare it to the quarter 3 of a year ago, it's a 38% year-over-year increase. But our year-to-date results, currently we're at $88 million USD. This is a 53% year-over-year increase, and for that we've churned out about a 25% EBITDA margin and net earnings of $11.5 million USD, which is 25 cents US cents. So we're up year-over-year by 112%. The 5 analysts that are covering the story have a consensus of revenues between around $108 million and north of 20% in EBITDA. And we're very, very comfortable with these forecasts. And the point here is that the cycle is actually just beginning. So the peak is probably some 3 to 5 years away. Just going to talk about our balance sheet for a moment here. Something that's quite peculiar to Geodrill is that by design, we have a comparatively small fleet, yet we have one of the largest CapEx models in the industry. So whilst we might not be the biggest driller by rig count, pound for pound, we are kind of like the tallest short guy in the room. At 30 September, our balance sheet consisted of working capital, $42 million USD, net equity, $83 million USD. Our debt to equity is 12% of the balance sheet, but I would just emphasize that is total debt. If we actually add the cash back, we're actually $5.5 million USD net cash. Return on equity for those passive investors, our ROE is currently 16%. This compares favorably with 1 year ago when we were 6%. And our ROCE is 21% versus 10% a year ago. The other interesting thing that's a little peculiar is the high level of ownership in this, insider ownership in the Geodrill name. I myself own 40% of the stock. So we have a lot of skin in the game. Finally, as a testament to our strong balance sheet and net earnings, we recently initiated a maiden dividend. And that was paid during 2021, and the intention is to continue with that dividend next year. So, in conclusion, we believe there are several catalysts that will make the next few years transformational. The cycle is turning and Geodrill is benefiting from improved gold markets and sector rotation. We are now seeing the benefit of diligent growth decisions, including increasing our rig fleet even during the down cycle. And we're expanding into high growth markets such as Egypt and Peru. So our long-term outlook is very positive, with increased utilisation driving strong free cash flow and expansion initiatives. And there you have it. That's Geodrill, the Geodrill story, a great business in the right geographies with great prospects for growth. Thank you very much. Now, just checking for any questions that we may have from the audience. So, what is the company's vision and where would it like to be in the next 12 months? Well, I think it's going to be more of the same. We will continue to leverage off that very strong demand that we're seeing at the moment, which is driven, has the tailwinds of an $1,800 gold price. And so we're seeing a lot of money go into exploration, and Geodrill expects to benefit from those, tough decisions that we took during the down cycle, when we could have probably been paying dividends earlier, but we took decisions to invest our free cash that we've been generating since about 2016 back into the fleet. And this has enabled us to grow the rig fleet from what was then 37 rigs to what is north of 70 rigs today. So we've almost doubled the fleet size during a down cycle. So if you consider that we've done this all through a down cycle and that we're in the first innings of an up cycle, imagine what the next 4 to 5 years or however long this up cycle will be. So it's really all just getting started. Another question that we get quite often is, why organic growth? Well, there's a couple of reasons for that. And firstly, we have a very strict discipline at Geodrill of standardisation. We'd like to keep our rigs standard. And that's because operating in the markets that we do, we're a long way from home, a long way from, the infrastructure that you have in, say, the North American market or the Australian market. And so it doesn't really lend itself to motley equipment. And so for that reason, we've been very disciplined since the get-go in keeping the rigs very standard. By example, today we have 70 rigs, and that 70 rigs is made up of 8 different types of rigs. Well, if we wind the clock back 5 years or so to when we had 37 rigs, the amount of rigs that we had was 8 different types of rigs. So we've managed to double the rig fleet without changing the types of rigs. And this just all works very well for us in operating a more efficient business. So there's the standardisation aspect of it. M&A can also be risky, and it can be quite expensive, particularly when you consider the fact that this story, Geodrill, trades at about a 3.5 times EBITDA multiple. And that should be quite attractive for potential investors. But for looking at that as using that as currency for any potential M&A, it would be extremely dilutive. And so, whilst this actually speaks to the valuation gap, it actually makes M&A extremely dilutive for us. For your information, private equity is currently paying about 4.5 times good drillers at the moment. So there's definitely a valuation gap there, and there may be good reasons for that. We don't really understand that. But I think that's where the opportunity lies in this story. The stock is listed on the Toronto Stock Exchange, and the Toronto Stock Exchange and that investor community are very busy with lots of things other than mining at the moment. But what I do know is that when mining is strong in Toronto, it's strong. It is actually the largest market in the world for miners. And when it comes back with a vengeance. So I think the real opportunity exists there today for people looking at getting into geodrill, because in the height of the last upcycle, this story was trading at 6.5, 7 times EBITDA. Today we trade at 3 times. So, you know, that would imply, and I'm not suggesting for a minute, you've got to do your own due diligence, of course, but we're trading basically about 50% under our intrinsic value. Well, we've just got a minute. We've got one question there about ESG. Well, I'm glad someone's asked that question. At Geodrill, we definitely believe in doing what is right, not what is just required. And at the core of our vision and values is a commitment to the communities and the environment in which we operate. So Geodrill is leading the way within environmental practices, transparency and accountability for all of our stakeholders. And as a result of that, Geodrill has recently been awarded several prestigious ESG awards. So I think we're okay for questions now. If there are no other questions, I'll just stand by for a minute. Also, I'm just working through the platform here to see if there's any others. It doesn't appear to be. So I'll thank everyone for their time today, and I will sign off. Thank you very much. Thank you for attending. Thank you.
That concludes today's presentation, and thank you for tuning in.